Breaking news on Tesla. Phil LeBeau, what's going on?
John, we have a date for the unveil of the Robotaxi. Yes, Elon Musk says there will be a Robotaxi, and he plans to unveil it on August 8th. He just put that out on X. That's all he said. Did not say anything about when we might see this go into service, any of the particulars, if it's going to be a new model, if it'll simply be software attached to a current Tesla model. But again, Elon Musk saying that we will get the unveil of the Robotaxi on August 8th. Let the speculation begin in terms of what that will entail.
We're watching Tesla. It's clearly a huge subject of conversations, having a terrible year, right? It's down over 30%. The latest numbers were disastrous, according to some of the analysts. Corey Johnson, chief market strategist, the Futurum Group, and Steve Wesley, founder managing partner of the Wesley Group, a former board member over at Tesla, both with us. So, Steve, I'll start with you. People love Tesla. They loved Elon Musk's vision. Is Tesla going to rise from the ashes like a phoenix? Like a friend of mine said. I stole that. Is that what's going to happen, Steve Wesley, or not really?
Look, it's going to be tough. I'm more bullish about EVs than ever. But Tesla had a terrible quarter, and it's not a complete surprise because 3 of their major facilities in Berlin, they had arson. The plant was down for a week. No one saw that coming. China, they knew the plant was going to be down for 2 weeks for New Year's, and then you've got the plant in Fremont was down. Well, they did the refresh for the Model 3. But the big story here is the Cybertruck has been a flop so far. We'll see if they can fix that, and they're late on the $25,000 vehicle. That's what they need to do. But despite all the hardship, they still managed to produce more EVs than BYD last year, so give them credit for that. But I think this is going to be a choppy year. All eyes at Tesla have to be on how soon do they get that 25K vehicle into market, and how successful is it with consumers? We'll see.
Wall Street getting more bearish on Tesla after a rough start to the second quarter. A number of analysts cut their price targets this week after the company reported disappointing first quarter delivery numbers. Guggenheim reiterated its sell rating and lowered the price target on the stock to $122 from the previous $132. Let's bring in Ronald Yepsico, who is the Guggenheim Securities Director of Automotive Equity Research, to discuss more. Ronald, take us into your thesis here. I mean, you're looking at a few things. The delivery downside in this quarter, saying it's a function of demand and not supply here. What is the demand profile that you're seeing in this environment, as a lot of customers seem to be wavering here on their purchase intent?
Absolutely. I would say mostly a function of demand. There obviously were supply issues, we think, on the Model 3 in the U.S., but most of the downside this quarter relative to both year over year and the fourth quarter of last year was driven by demand. We think U.S. volumes were down something in the range of 20 to 25%. We don't get that number in the release, but we're able to back into it from other regional data. And I think, understandably, it was a very messy first quarter. U.S. EV demand slowing. China competition is quite strong, both BYD, Xiaomi, Huawei, which operates through the ITO.
It's common knowledge that Tesla is leading the charge on the EV revolution, but we've all seen the company's Q1 deliveries and how surprisingly low they were. This led many people to start questioning whether the company will be able to reach its goal of selling more than 2 million cars for this year. But what if I told you that some analysts think deliveries don't really matter? And that's because Tesla is also leading the charge on something that could be even bigger than its car business. We're going to tell you exactly what that is. But before we do that, if you want to keep up with Tesla's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Obviously, we know that the EV market has slowed down, right? Tesla is sort of the poster child for that. I guess, is there any other case to be made now about when growth could be maybe reaccelerating?
Yeah, I think, and first of all, Julie, thank you for having me on. I know we have a little bit of a disconnect on the audio side here, but clearly, as you mentioned, we're in a situation where EVs have fallen into kind of a middle period where we've seen an early adoption, primarily in coastal states, where Tax incentives have helped boost those sales. And now we're kind of in this period where the rest of the country needs to follow suit. And, with about 50% of the U.S. not having garages and range anxiety being a real thing, it's really a time will tell sort of scenario for the EV market. It creates a great amount of uncertainty. And certainly, as we've seen with the automakers pushing out some plans for some of the massive amounts of CapEx that are needed to build out for this expected growth. It's really in the next 3 to 5 years have a lot of unknowns that we're going to live through, and so we're looking for other areas within the auto space to potentially participate.
Al, same question to you. I'm just interested, what do you think explains kind of the slowdown in EV demand that we've seen, Al, and what do you think maybe re-accelerates it?
I think a few things. One of which...
Many analysts right now are talking about the uncertainties facing the EV industry, but Tesla CEO Elon Musk chose to break through all of that, and here's the breaking news that we were all waiting for. Elon announced yesterday that Tesla will reveal its Robotaxi vehicle on August 8 of this year, so we can't wait to finally see this Cybertruck-like innovation. He has been teasing Robotaxis since 2019, so this is a massive development and a step in the right direction for Tesla. Elon tweeted the announcement after the market closed, but after the tweet, Tesla stock gained nearly 5% in the extended session. It's no surprise that investors are excited. A while ago, ARK Invest CEO Cathie Wood said that the global robotaxi opportunity will deliver $8 trillion to $10 trillion in revenue by 2030 and is one of the most important investment opportunities in our lifetimes. When the market was open, the stock fell by more than 3% after Reuters reported that Tesla would abandon its plans to build affordable EVs to focus on robotaxis, but Elon quickly responded with a tweet saying that Reuters was lying. Back to Elon's announcement, we don't know what would actually happen on the 8th of August. Tesla might reveal a prototype like it did with the Cybertruck, and it might even reveal an app like Uber, but for robotaxis, which people will be able to use to request rides. The possibilities are endless, and that's what makes this so exciting. Tesla aims to create a vast robotaxi network that would run on the company's impressive FSD software. In other words, what Tesla wants is a world where tons of people are using FSD taxi service. The more cars on the road, the more data Tesla collects on traffic patterns, making the entire network even more efficient. This efficiency could attract even more riders, creating a powerful feedback loop that keeps Tesla's FSD business booming. What's even better is that robotaxis will operate 24/7. Unlike human drivers who need to sleep and eat, Tesla's self-driving cars could theoretically be on the road around the clock. That means more rides, more revenue, and a whole lot less downtime. Plus, there's also the factor of convenience. No more waiting around for a ride-sharing car that might be stuck in traffic. With FSD, your ride could be waiting for you whenever you need it. Robotaxis will also allow everyone to get the full FSD experience by only paying for a taxi ride, making the technology accessible for non-Tesla owners, and also owners who can't afford to pay for the $12,000 FSD add-on or the $200 per month subscriptions. This shows just how much potential there is in Tesla's FSD software. In fact, the company recently announced that its cars have driven 1 billion miles with the help of its FSD software. That's how popular FSD is with Tesla owners, and Elon congratulated the company's AI team for this achievement, saying that it won't be long before Tesla exceeds 10 billion miles of FSD. Maybe Elon and Tesla saw just how advanced the software had become, so they decided to focus more on getting robotaxis out there sooner, but that doesn't mean the $25,000 car is cancelled. FSD goes beyond Tesla vehicles and robotaxis. In fact, soon enough, Tesla won't be just selling cars, but also access to this unprecedented technology. A lot of investors are focused on Tesla's car business, so much so that they are easily distracted by the recent noise on EV demand and lower than expected delivery numbers. To RBC Capital, those delivery numbers aren't that important right now because the company's true long-term value isn't just about making and selling cars, but about its FSD capabilities, including its robotaxis. Let's take a look at what RBC analyst Tom Narayan, had to say about this.
Part of it is one-off, right? They had the Red Sea conflict, which had 2 weeks of production out in Europe. You had the pull forward of demand into Q4 because of the IRA expiry and the Model 3. Definitely Q4 was super strong in 2023. That came out of Q1. So there are things like that. You also had the Berlin Giga arson. So all of those things probably accounted for tens of thousands, I would argue, of missed volumes. But the miss was so big, right? It's supposed to be 440,000. It came in 387,000. So some of it is probably underlying weakening demand in the US and in China and in Europe. Tough to say how much is which. Probably most of it is one-time in nature, but definitely a part of it is going to be something that's going to impact them for the rest of the year.
Tom, long-term prospects for Tesla can't be that bad, can they? Otherwise, you wouldn't have an outperformed rating on the stock and a $298 price target.
That's right. They just launched a free trial of FSD, which could be pick things up in Q2. Numbers are definitely going to come down for Q2. And look, the stock, despite this performance today, is only down like 4.5%, which makes me think that expectations are already really low. FSD is an incredible product. They have the version 12 out there now. I watched a bunch of YouTube videos. People really impressed by this product. Maybe that gets people in the showrooms. Maybe it gets people to subscribe to it. Maybe it gets people to buy cars. So there is that near-term catalyst, but bigger than everything else, most of my valuation is on things like energy storage, something nobody's talking about, huge opportunity for them, and also autonomy, right? If FSD works, now it's a software business with a software multiple. So if they get that take rate up and people subscribing, I could see folks like myself start writing colorful reports talking about AI and autonomy. And it's a narrative stock, right? So longer term, that's really where my valuation is, not in the car business, but on energy storage and autonomy.
Tesla's ambitions extend beyond simply replacing gasoline-powered cars with more environmentally friendly alternatives. Instead, its sights are set on a more audacious goal, which is transforming the very nature of transportation through self-driving technology. The global investment bank, RBC Capital, recognizes this. In a new note, the bank revealed that it values Tesla's FSD technology above its car business, and according to Tom Narayan, Tesla's latest FSD free trial could potentially be more important for the company's investment thesis longer term than its Q1's delivery miss. He believes that this free trial is Tesla's catalyst for Q2 of this year, adding that in the worst case, this software could at least increase Tesla's brand awareness, and in the best case, it can increase the FSD attach rate and possibly increase the deliveries of Tesla's Model Y and Model 3 vehicles. So, what does this all mean? And can Tesla's FSD really be bigger than its car business? Let's find some answers. Hello everyone, and welcome back to Investocracy. Imagine instructing your Tesla to take you to work, and it does so seamlessly, while navigating traffic like a seasoned pro driver, allowing you to relax and plan your day. That, dear viewers, is the future that Tesla envisions with its FSD technology, and this could become way bigger than just selling cars. Because Tesla isn't planning on gatekeeping this impressive technology. In fact, the company has always said that it'll share its FSD discoveries with other automakers, and CEO Elon Musk recently said that Tesla will license the technology to other automakers after it's done developing it. By licensing FSD, Tesla unlocks a new revenue stream and solidifies its position as the true EV market leader. But that's not everything, as the company would gain access to a large amount of data, which it can use to train and develop its self-driving software even more. The automaker would have a treasure trove of information on traffic patterns, rider behavior, and many other indices. And besides using this data to improve its products, Tesla can unlock another revenue stream by selling data to other car companies. This would also give Tesla a competitive edge over Chinese EV companies and other startups that continue to bring out many different EVs at more affordable prices, which caused Tesla to start feeling some heat from the competition. Future fund managing partner and Tesla bull, Gary Black, recently gave us some insight about how Wall Street feels about FSD, tweeting that Morgan Stanley's Adam Jonas now attributes just $62 per share of his Tesla stock, $310 price target to the core auto business, while attributing $104 per share to third-party licensing deals. Institutional giants are starting to bet on FSD licensing as a bullish catalyst for Tesla, and if this isn't enough for you to be bullish on the company, I don't know what is. The success of the company's FSD can also have a huge impact on its humanoid robots, because Tesla's AI team could use the same technologies to train Optimus, so there's a lot of opportunity there as well. If you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
The landscape has changed. Tesla's not the only player in town anymore. So the way for this to succeed would be more EV demand. That's what you need. And Steve, is that going to help Tesla? Is there going to be more EV demand for everything? We're not really hearing that from the likes of Ford and GM. They're focusing more on hybrids these days.
Look, there's absolutely going to be more EV demand for the rest of our lives. There's about 80 million cars sold globally a year. Last year, about 14 million were electric. That's a huge number. This year, it's heading to 18 million. That's going to be over 25%. That's an inflection point by any standard. So more EVs are going out. The question is, who's buying them and what happens when you have more competition in the market? And the reality is, Tesla has owned the US market. They've done pretty well in Europe, pretty well in China. The Chinese are now coming with a vengeance. BYD and a lot of firms most investors haven't even heard of, like Li Auto, Geely, have great cars. And what's going on here is BYD is basically just owning the sub-economy market. Right. That's basically 10,000 to 25,000. Tesla's got to get in that $25,000 market. I think they will. It's just a question of how long will it take.
Yeah. And Steve, I'll give you a second to think about this, but if you had one sentence to tell Elon right now, I'd like to know what you would say to him. Corey, what names do you think are best positioned? And by the way, I disagree with you, because I think that the Cybertruck, all you need is one soccer mom to say it's great, and then all the soccer moms will buy it.
Find me that soccer mom. I'm all for it.
Well, listen, I was never a minivan person because my kids would say, well, you're a soccer mom. I was like, yeah, but I like a monster truck with big wheels. Like, you know, I couldn't be seen in a minivan. That was not my look. My look would be a Cybertruck. And I think there are a lot of moms out there who they go weightlifting and whatever. And I think moms are evolving into something cooler. And so I think that could happen. What are your best bets when it comes to EVs? Which ones do you think will lead in the race, Corey, quickly?
Well, I think looking away from Tesla is, you know, to Steve's point, right? There are a lot of electric cars being sold, electric vehicles being sold. And if you go out, if you take Tesla's results out of electric vehicle sales, you see that they're still rising by well over 30% in the last year. So there's terrific growth across the industry in electrics. Now, did Ford back off their production a little bit? Yeah, they have on the margin. But generally speaking, we see big growth in electric vehicles across the board, and all of the other companies are doing really well with it.
All right. And last but not least, Steve, what would you say to Elon Musk today?
Get the $25,000 car into the market as soon as possible. That's where every moment of energy should be spent. Dial down the controversy, get that car in market. That's going to determine the future of the company.
Critics say that Tesla will take years before it delivers on these promises, but that's not the case at all. These past few days, Tesla released 4 updates to its FSD software in just 1 week, and we think this means that Tesla cars will be capable of full self-driving by the end of this year. Recently, FSD was upgraded to a new level called FSD Supervised, which indicates Tesla's newest achievement in safety and autopilot technology. For the first time, the word beta was removed from the software and replaced with supervised, meaning that this could be the end of the FSD beta testing program. Although this software still requires drivers to remain aware and be prepared to take over the driving, we still think that Tesla is making a lot of progress that no other car company is able to achieve. However, there's still a lot of work to be done to make Robotaxis a success. Tesla needs to build rock-solid trust with the public before people feel comfortable climbing into a driverless car. Not only that, but governments also need to be comfortable with self-driving taxis zipping around, and they'll likely need to establish clear rules for self-driving taxis, which could take some time. But here's the thing. Tesla is a company that thrives on challenges. It is constantly pushing boundaries and innovating. So, it's not out of the realm of possibility that the automaker could find ways to overcome these obstacles. So, to the big question, will self-driving robotaxis and cars become Tesla's golden goose? First, let me say that there's no crystal ball here, but one thing's for sure, FSD and robotaxis have the potential to be a transformative technology. They could reshape transportation, create new and sustainable revenue streams for Tesla, and maybe even change the way we think about EVs altogether. And that's a ride worth taking. What are your thoughts on this? Are you excited for the Robotaxi reveal? Can FSD be bigger than Tesla's car business? Let us know what you think in the comment section. If you would like to know what Tesla has been up to with its FSD software these past few days, then go ahead and click on the next video on your screen. See you there.